my wife was talking to somebody at the girls' taekwondo, and she was over at the house the other day, and she was like, I can tell that your family is really close, and your husband's around a lot. And she was saying something like, I wish that was our case, because most people have to work a lot. They're traveling a lot. They're working,
Yeah.
hours that you and I don't have to work. We choose to do that at different times, but we have a lot of flexibility. And then I said to the girl, and then my wife said, yeah, dad could have made a lot more money. He had the opportunity to work a lot. And today we would have an opportunity to have an extra $40 million in the bank. But he chose not to do that.
Representing franchise secrets, Erik Von Horn.
Justin, welcome back again.
Yeah, thanks for having me. I always love our convos. We always get into some really interesting topics, and more than anything, we just get to talk life, and I
I
appreciate that. I
know.
appreciate your friendship.
Same, feelings mutual. We were on a Tribe of Investor call yesterday. And one of the
Yeah, we
things
were.
that I love about those calls is you always come like, oh, I was reading this thing, I was learning this, I was talking to so and so, or I was listening to this amazing speaker that most people never get to listen to live. So, can you share just a little bit of like what investors should be thinking about the economy these days, or what some really smart people are saying? Because we don't talk about that very often on this podcast. So when I get somebody like you on, I always like to get perspective on where we are today.
Sure. Yeah, let's dive in. There's a number of things I've been learning here recently and people I've been meeting with, and I feel like part of me, I feel blessed because I'm just naturally curious. I like to learn, I like to meet new people, I like to ask a lot of questions. I'm always curious. And so, the last few weeks I've gotten a chance to meet with like the Fed chairs in Dallas. They actually came down to Austin to meet with a bunch of entrepreneurs. So it's cool hearing how they make policy decisions and that they wanted our feedback. They wanted to know what we were thinking about AI, just all kinds of different things. And then I went to Vegas last week because I'm part of Tiger 21 and they had their annual event. And Jamie Dimon, who runs J.P. Morgan Chase Bank, was there and shared incredible insights. And I think we had the luxury of being able to go deeper on topics that I think normally he can't go as deep on when it is going to be out in the public. I mean, this is, info that's not going to be released, where we've signed NDAs. So I really feel like we got to learn a lot about the way he thinks about the world and economics and interest rates and the future. He's very optimistic about the future, very optimistic about the dollar remaining a reserve currency. Still pretty pessimistic about Bitcoin. And that makes sense because it would be a huge disruption to their industry and their bank, right? So I get that. But he, was very open and just saying like, hey, I think if you want to own it, you have that right. But long term, he doesn't believe in it. Whereas I think anyone who understands um, Keynesian economics and sound money, Austrian economics, they're going to see a need and a place for Bitcoin and for um, in addition to Bitcoin, stable coins. So and by the way, they're rolling out their own stable coins. So I mean, there's things that they're jumping on board with. He believes in blockchain. I mean, we could go on, but I just feel like we got some great insight from some really smart people here recently. And then I capped the trip off. Unbeknownst to me, Grant Cardone came and joined us for dinner. His business partner, Brandon Dawson, is a Tiger member. And we were talking kind of about 10X, the new facility, the build out that they're doing, which is going to be really incredible in Scottsdale, Arizona. And so, yeah, it was just kind of fun seeing those two collaborate, the way that they think, what they're building. And I'm not advocating for, any deals or anything that, Grant does, but I think what they're building on the 10X health front is pretty incredible.
I was going to ask you, did you make sure that you told him that you're not an investor in any of his stuff and why you're not an investor? Did you get
Uh,
into that?
no, no, but ironically, it never came up.
No,
It's so odd.
interesting.
We didn't even talk about any of his deals or my opinion of his deals.
And when you're around people like that, that doesn't matter. You might think somebody has the worst deals in the world from a deal standpoint, but you can understand things about them, the way they think, the way they do things, and that can open up like learnings for yourself. So you don't have to go into it trying to prove a point. And I know you would never do this, but just for the listeners out there, like looking at something from their perspective, digging in deeper, asking questions, being curious, and not just being like, oh, I don't like your deal structure because of these different reasons. So is that how do you kind of go into conversations like that in general with people that you may not agree with certain things on, but you're curious about them?
Well, I think it's pretty healthy and normal and good to have philosophical differences with people. Like I actually want people in my world and in my ecosystem that have a different view than me. I want to be able to discuss it in a civilized manner. I want to be challenged in a diplomatic way, not in a condescending way. Like I do want to think through, like, are these my beliefs? Did I inherit these beliefs from my parents? Did I inherit these beliefs from mentors? Where did I get these from? Did I just come up with them on my own, or are there facts and research behind these opinions? So I like my thoughts and opinions being challenged in the right mediums and by the right people that will do it in a respectful manner. I love, the banter of debate and that. And so, though I probably differ on deal terms and deal structure and the types of deals that I would do, I think he's a brilliant marketer. I think he's a brilliant entrepreneur. He's done some incredible things. He's really interesting and really quite a lot of fun to be around. He's very dynamic and animated. And just even watching some of the posts that he did while we're there with him, he's got some genius stuff. So it was fun. And his business partner Brandon is incredible. I'm going to actually meet up with him when I go out to Scottsdale. I'm going to go to the pro athlete community, which I think you're joining. I hope you're joining. I know you're figuring it out right now, but that's going to be fun because Dane Espegard and Ryan Casey. So if you join, that's all four of us.
All right, I'm in. I'm in.
All right,
I'll text Ryan while we're on this podcast to let him know that I'm in because that sounds awesome.
To everyone listening, you now are my accountability. To your audience here, you now know that Erik has formally committed. We've been trying to lock him in for a while. Maybe it was a dirty move that I bring it up here and peer pressure him here on a podcast, but I think you're going to be better off for being there. And while we're there, I think we're going to be able to connect with Brandon Dawson. And besides meet some really cool pro athletes, we're going to do some good work while we're there.
I like it. I just sent you and Ryan a text. So I said, I'm in. So it's official.
I like it.
Before we get to really the point of this podcast of like going from active income to passive income, I want to stay along the lines of like being curious versus closed-minded. There was a post on X last night. Someone that is a well-known person on X said, hey, I just heard this one franchisor just sold for 30x EBITDA. And then some people went in, they were like, yeah, I can see that franchisors sell for a lot of money. And by the way, that's not common out there, just so everybody knows. But
that's an outlier, right? Wouldn't you be closer to 20 or so? Maybe 15 to 20?
10, 15, 20x, yep. But 30x, I mean,
30 is high. That's incredible.
Some people are saying that's incredible, like you. Other people are being like, that's stupid. Who would ever buy that? Versus kind of asking some questions. And I didn't want to get into it there because like you get into an argument on X or any social media, like you don't really win. Even if you win, you don't win. So I'm not going to get in there and get into that and trying to explain very much. I just made a comment, embedded EBITDA, which basically means they are valuing that thing on future EBITDA, next year's EBITDA, next year's cash flow. And when you're in a franchise brand that has good economics, good franchise growth, meaning franchisees are coming in, the franchisees are opening, they have consistent, predictable revenues coming in, profits been predictable. So 5 years in, everything is going up and to the right. They're not valuing that off of last year's EBITDA. They're really looking at next year's EBITDA, embedded EBITDA. And so that's really, what happened there. So you could also make the claim like, Well, if next year's EBITDA was 9 million, because that's where it's predicted to go, that's a more like a 10x multiple versus a 30x. Founders are is going to want to say 30x, but a company's looking at what is it going to be next year. They're just looking at future cash flow, and so you can look at it from last year's EBITDA, next year's EBITDA, and then or like a discounted cash flow, however you want to look at it. But that's really what happened there. So they had $3 million of last year's EBITDA. The following year's EBITDA, I'm sure, was significantly more because they were at that hockey stick curve. And that's why some of these things get valued more. That's what I wanted to say on X, but I just stayed out of that conversation. So who knows? Maybe this podcast will get posted in there and then I'll get drawn into a debate on why that's good or bad. But that's being curious, right?
Oh yeah, and the reality is, it's like most of the commentaries from these, what are they called? Like the backseat drivers or side chair quarterbacks. You're sitting on your couch critiquing the way someone's playing in the game, but you're not in the game yourself. And the reality is, we don't know, like the inside baseball that these PE firms have, and that a lot of these investment groups have, with the data that they have at their fingertips. They're seeing things that the average person doesn't see. And then also, based on what other assets they may own, or based on what other, media or eyeballs they may have, they have all these other ways to monetize it. So, I don't think it's fair to rip on the groups that do that. I mean, number one, you congratulate the people that had the outlier success. But number two is, we don't really know for probably a year or 2 or 3 years. So it's hard to, like, to me, when I see people being critical, I'm like, well, you don't know. I mean, at least give it a couple years before you're critical. Let's see their theory play out.
Yeah, I think that is a great point, kind of, and this part of the conversation is like they're playing a different game. Like I'm playing a different game that I was playing 5 years ago.
Yep.
There are groups that are playing a different game that I'm playing today. I
Oh
don't
yeah.
understand it. And I was on the phone before you and I got on this podcast, and I was talking to somebody, and he's like, Eric, is it really true? And he asked me some different questions about how franchisees are valued in a transaction. Sorry, corporate owned franchises are valued in a transaction that's sold to private equity. I'm like, yeah, that's true. He's like, I can't believe it. I never knew that. I heard that a few years ago, but I didn't believe it. So there's just different levels to the game. And just because you've graduated or I've graduated, I need to remain curious to understand what the next levels are, so I can, just either be playing at that level myself, or preparing my company today to be able to maximize valuation to play at their game. Attention, franchisors and franchisees. There are two really important resources that I want to share with you that will help you avoid costly mistakes and increase your enterprise value. The first is our free Facebook group. It's a community that has over 4,000 franchisees and franchisors in it. When somebody asks a question, they get honest and authentic answers from multiple perspectives. You can join the group for free over at franchisesecrets.com/Facebook. The second resource I want to share with you is, if you're a franchisee and you want to be around a community of successful Z's and other brands and in other industries, this is why I created the Franchisee Mastermind. If you want access to the best single and multi-unit owners to know what they're doing, or if you want to be around other multi-brand owners, then you'll want to check out my Franchisee Mastermind. The reason why people join is they want access to my Rolodex, my connections, to each other. They want a shortcut success, both short-term and long-term. Links will be in the show notes or at scalablefranchise.com. So.
Yeah, and it happens in a lot of industries as well. So it's not just, franchisor, franchisee, space. I mean, we got an incredible offer for our real estate, for our mobile home park portfolio. And the way that it played out is, they were willing to pay more than what it is worth today because of the upside they saw in the portfolio, because we're way under market in rents, because we have a ton of upside on infill, and a ton of upside on occupancy. Our expenses might even be a little high for what they do, but probably not that high. So they can pay a premium today if they recognize that they're going to have the ability to really outperform it, in a few years, or even in the long haul. It doesn't even have to be in the first few years. So I just want to remind people that, that long term, run your numbers, figure it out. But sometimes it makes sense to pay a premium for a high quality asset. And then to the point of playing a different game, this is so interesting. But I was talking to someone else, so that deal ended up not working out. Um,
And this
and
is for your
basically,
current, like some of your current stuff, part or
that's
all
right.
of your current portfolio.
That's right. And so, like, we could have sold everything end of year. But I would have had to take a discount in the end, at the end of due diligence, that I just didn't feel comfortable taking. So could we have gotten it done? Sure. Would I have been leaving chips on the table? Most certainly. And especially, with all the rate cuts that have happened since, with our financials improving, with, the next rent increase that went into play. So, it makes all the sense in the world that we didn't need to make those concessions, and I'm happy that we walked. But um, I was having a conversation with someone last night that said, "Hey, I've got a handful of clients that could be interested in your portfolio." And by the way, for me, whenever we sell this thing, it will be my largest transaction, and it will be a sizable transaction. And my wife and I chatted, and we're like, "Yeah, this would be a total game changer for us."
Every
Um,
$100,000 transaction is great, Justin.
that's
Every
right.
every
That's right.
100,000.
Well, I was talking to this, friend, and he's like, "Yeah, I've got a couple clients that may be interested. One of them makes 30 million a year, and the other one makes 100 million a year. And they just need some tax write-offs, and they just need some, good plays." And so it's like such a paradigm shift to think, like, you hear, these big numbers of what you want to sell, but then you hear someone that is making, just an absurd amount of money every single year, has more than they know what to do with, and can single-handedly take it down, but like without even batting an eye, right? Like, even if they took it down and the thing died, it would make no material difference to their life. But that's how easy a transaction, even at that size, even a transaction that most people look at and say, "Wow, that's a massive transaction." To some people, it's not. And that's really fun to think about. It's really fun to think of the different levels that people are playing the game of business and life and wealth creation at.
That's what I appreciate about you is you're playing at a level that most people will never get to. Both of us are playing at that level most people never get to. You're playing at a higher level than I'm playing right now. I'll catch up to you, but you're playing at a higher level than I am. You are very comfortable around, like I am, being around people that are playing a higher level than you, giving
Oh
them
yeah,
credit,
I love it.
learning, and being in that inner circle. Give the audience a sense of the size of your portfolio, however you want to do that, number of lots, number of parks, whatever that is, but give them a sense of the size just so they can kind of understand.
Yeah, so this portfolio is about 20 or so mobile home parks, right around 1,500 lots, the ability to expand some others, and in some really good markets, and pretty much all consolidated. The vast majority, I think 16 of them, 15, 14 of them are within 25 to 30 minutes of each other. Most of them are within 5 to 10 minutes of each other. And then we've got another four that are 90 minutes away. So the vast majority, 18 of the 20, are in one state, one kind of central area.
So, like, would you say this would be life changing for you? Not in terms of lifestyle necessarily, but in terms of liquidity, putting different money in different spots and whatnot. Like, how meaningful would this transaction be to you?
Yeah, I mean, it would certainly, my wife and I agree. This would be a life changing transaction. Now, does it change our lifestyle? No. We actually have a really good lifestyle based on the cash flow that we generate from our passive investments. But from the standpoint of being able to generate that income in a different way, to have the ability to allocate to different things, to have the ability to be generously, radically generous. Um, you know, it would allow us to do some different things there. And then, we've got a bunch of projects that we're in the middle of, or that we haven't begun, that do take some capital outlay. Maybe some things that we want to do out at our ranch, or maybe some, we've got some rehab project in our primary home. So there's a number of things that, we have not made a priority that we would easily make a priority here. So Yeah, I would say that this would not only be the largest exit we'd have, but it would be substantial in terms of what we could do with it.
So I was just talking to the family this morning. I was having some coffee with Mags, and the girls were all in the living room. We usually do this like every morning for about an hour, just have some conversations. I might be sending emails. I might just be drinking coffee and talking. But like, my wife was talking to somebody at the girls' taekwondo, and she was over at the house the other day, and she was like, I can tell that your family is really close, and your husband's around a lot. And she was saying something like, I wish that was our case, because most people have to work a lot. They're traveling a lot. They're working,
Yeah.
hours that you and I don't have to work. We choose to do that at different times, but we have a lot of flexibility. And then I said to the girl, and then my wife said, yeah, dad could have made a lot more money. He had the opportunity to work a lot. And today we would have an opportunity to have an extra $40 million in the bank, but he chose not to do that. And that whole story. And I hadn't
Oh yeah.
thought about it since then. And I
I
said to
think
the
it's one of the
girl,
best decisions you ever made.
100% it is. And for many different reasons, to see it play out and how it played out, absolutely the best decision I've ever made. Hard at the time.
Oh
And I asked the
yeah.
girls, I said, what if we had, $40 million in the bank? And they have no clue like what that really means. But I'm like, if you could get anything that you wanted, what would you want? We just went around the room as a family talking about that. Well, one of them, I think, wanted another horse. One of them wanted a different lake house. I wanted a different lake house. We got a little lake place. And then I told the girls, I'm like, mom would want a barn, like the Taj Mahal of barns for the horses. And she's like, yeah, you're right. How did you know? But all of this stuff we could do today if we wanted to. Is it
Yeah.
like the best use of my money? Absolutely not. But could we do it? Absolutely. And really, how would that change our lives? Like, how much did that really change our lives? So it was really good kind of reflection moment this morning, thinking more money is really not going to change how we live. It might change some things like you just mentioned, but it's not going to change how we show up as a family. So I was very interested in how this conversation landed here today. Any last
Yeah, that's
comments on
awesome.
any of that?
I love that. I mean, I think you're the epitome of a front row dad, and I love that. I love how you show up for your family. I know there are a bunch of things that you could also join us on, and you're like, nope, need to be here with my family, and I totally respect that. With the exception of the pro athlete community, because I really want you there, and I put the full court press on. But I mean, generally, you're very you're strategic in what you do and you don't do, and I think that's awesome. And at the end of the day, um, what does your family want? Your family wants your time. I mean, you ask my wife. I mean, here's a perfect example of this. I mean, I've made the mistake. I'm just gonna, come out and share, some of my flaws. Is I'll, sometimes early in my career, and maybe this isn't even too many years out, I would say, well, I'm working. My wife's like, why are you working so hard, or what, and it's like, well, I'm working so that I can provide for the family. And she'll call me on it, and she has many times, because I'm a slow learner at some things. And she's like, no, 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 don't mistake it. You are not doing that for the family because we have enough. You're doing that for you. You're doing it for your ego. You're doing it because you like it. You're not doing that for the family. And in the beginning, I kind of debate it, but in the end, I like sit with it. I was like, she's right. And my wife's very clear. I'm not looking for more money. I want more time. Right.
Mhm.
And I know for a fact that's how my daughter feels too. So I think to be willing to sacrifice more money to spend time with the people that matter most is the greatest sacrifice. That's the most worthwhile thing you can do. And there's always going to be ways to make more money. And I think when you're in alignment with your values and spending time with your family the way that you want to, I think you're going to show up better for ways that you can make money, creativity around it, ways to optimize it. So that's my belief. That's been my experience too.
Dude, I love it. I love the honesty. Um, the podcast wasn't intended to go here, but I love that it did. So we'll have to record another podcast on going from active income to passive income. So this was
Yeah.
awesome, man. Thanks, Justin.
Yeah. Thanks. This is fun.
Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.